The US dollar is lower versus all the major currency pairs in trading here today. Yields are lower. Stocks are also lower after some earnings disappointment, especially from AMD and Alphabet after the close yesterday. And that is helping to drag down some of the technology sector as well in pre-market trading. The dollar versus yen is the biggest mover with a gain of, or a decline of minus 1.0% versus the US dollar. In this video, I'll take a look at the euro versus US dollar, dollar versus yen, sterling versus US dollar from a technical perspective to kickstart your US trading day. So let's get started. I will start by taking a look at the hourly chart of the euro versus US dollar. And for trading this week, we have an update here. We have actually it closed up here. We have an update up here, and then we're working on our third day to the upside here for the greenback or for this euro versus US dollar pair. That's a lower US dollar in the process. In trading yesterday, the price moved higher and extended above the 50% midpoint of this move to the downside. That 50% midpoint came in at 1.0371. And if I put a horizontal line across the midpoint line right here, you can see how the price moved above that level and then rotated down in the early Asian session, found support buyers before started its rotation back to the upside. In the late Asian session, it looks like that move to the upside was able to get above the 200-hour moving average. That's the green line in this chart right through here. And notice here, if you look closely, the price did, after breaking above that level, testing the 61.8% retracement, the price came down and retested the 200-hour moving average right here and forced its way to the upside. So that is a bullish development. We are now above the 61.8% retracement and coming down to test that level right here. Also, remember the 1.0405 level. If you do, you probably remember it as being the 50% midpoint of the range since 2022. This is a 2022 low. This is 2023 high. The 50% retracement comes in at 1.0405. So that is near the 1.0409 level, which is a 61.8% retracement. So probably keep this cluster of technical levels defined by the 61.8% retracement, the 50% off the daily chart, and the 200-hour moving average as our support. Now, if the price is able to stay above that level, the upside can still continue to be explored with the dollar selling, and with the next key target area probably coming up here between 1.0448 up to maybe about the this high right here as well. But it incorporates a number of different levels going back in time. If I bring this back a little bit more, you just keep your eye on this area right through here. You can see how many times the price use that level, mostly as a floor here and then as a ceiling through here. Before breaking to the upside, making our new high in the month of January, rotating to the downside. So this area between 1.0448 and 1.0461 is key for on the upside if the momentum continues on the downside. Watch the 1.03988 level. If we go below that level, then we could see further probing to the downside with the 50% retracement back in play. Let's take a look at the dollar versus yen next. I mentioned that this currency pair has been the biggest mover with a move of over 1% to the downside. And in trading here today, or trading yesterday, we saw the pair move below both the 200-hour moving average, which it's pretty much made a mess over the last first two days of the week with moves above and below that level in volatile trading. We did try to hold the 100-hour moving average in trading yesterday, but then fell below it later in the U.S. session, opening the door for further momentum to the downside. That momentum took the price all the way down to the 50% retracement level and through in trading in the Asian session today. That level came in at 153.73. We tested it here, and broke through it there. That 50% retracement level, I have to go all the way back to this low right here, which is toward the end. Looks like beginning of December to the high price that we saw in January. The 50% retracement comes in at 153.73, and as mentioned, we came to tested it here. Breaking below it there is a bearish development for the pair, and we saw the subsequent momentum to the downside off of that break, which is always good news, and leaves this level as a key resistance level. Now, going forward, the price needs to get back above that level to increase the bullish bias. Now, on the downside, you see these levels right through here. We'll look at that one, 200-day moving average and the 100-day moving average, and the 61.8% retracement all come between the 152.42 level and the 152.77 level. So this is a pretty big cluster of support. As you can see, we've held the 61.8% retracement again of the move up from December and seen it bounce back above the 200-day moving average. So it's going to be a difficult nut to crack if we do fall below that level. This is what it looks like on the daily chart right through here. If we do fall below that level, that would increase the bearish bias going forward for this currency pair. So be aware, be prepared. But right now, it's trying to hold support, rightfully so. When those two moving averages are so close together, you've got to expect support against that level on the first test. Let's take a look at the sterling versus US dollar next. And this currency pair saw a move to the upside into swing area resistance up through here, defined by a number of different swing lows and swing highs going back in time. Outlined some of them through this area right through here, so on and so forth. We did break above it here, but failed and then reestablished the level before moving to the downside. Found resistance sellers here and here before moving lower. And then trading yesterday, we came back up to that level and stalled. Modest decline in the Asian session, but held above the 50% retracement level at 1.24532 of the move down from December. That was a good hold on that moved down to the downside, and that helped to push the price back to the upside. And above this, a swing area where we saw increased momentum. This area is now going to be a key support in trading here today between 1.24739 and 1.25. Watch the 1.25, the nice natural support level and high of the swing area for support. If we're able to hold that level and base, we could see further momentum to the upside with a break above the 61.8% retracement. Probably target this area up here between 1.2596 and 1.26147 on the top side. So there you have it. Dollar selling to start the U.S. trading day. Breaks above some key technical levels. So be aware, be prepared. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.